Have you ever felt like no matter how hard you work, your money just vanish? You are not alone here. The problem here, it's not about how much money you make, it's about the bad habits that keep you broke. In this first video of our two-part series, we are breaking down 5 common financial mistakes that are draining your wealth down. And most of people, they don't even realize that they are doing them. And if you're new here, I'm business analyst, I'm working in investment banking, and I'm also MBA and CQ qualified. The habit number 1 is not having an emergency fund. Life is always unpredictable. We always can easily face unexpected situations like car repairs, medical bills, or job loss, which can happen at any time. Without having an emergency fund, people start to rely on credit cards or loan, which easily start to pushing you to the debt. So why emergency fund is so essential? First, it helps you to avoid any debt. Because without savings, any unexpected cost will push you to borrow money. Then it reduces stress because of knowing that you have some money aside will always give you peace of mind. Prepares you to the job loss because of finding a new job sometimes it takes months, and having emergency fund it will help you to cover all the expenses that you have while you're searching for a job. And here is the rational way how you can approach to building your emergency fund. Start with the $500 and will be your first milestone. For example, if you face with the small emergency like some surprise bill. Next, aim for $1,000 as it will help you to cover larger expenses like something has been broken. Then work towards of saving like 3 months of your living expenses. And this is very crucial for bigger life changes like a job loss that finally grow to the 6 months of the living expensive, and this is ultimate goal of your financial security. For example, if you are employed, but if you are the business owner or entrepreneur, then I would suggest you will have to be focusing on the between 1 or 2 years of your living expenses. There is another question raising, so where to keep your emergency fund? One of the options could be high yield saving accounts, which is safe, accessible and always earn some interest. Another thing that I would recommend here is to separate your emergency fund account from your spending account, so you don't use it for everyday purchases. And also not in the stocks or investment because the market can drop on any day where you exactly need the money. So how to build your emergency fund? Start small, even saving from 10 to 50 pounds per week adds up more over time. Cut unnecessary expenses, redirect money from eating out and also buying impulse purchases. Automate settings, set up after transfer so you don't forget. Use your extra income, it can be your side hustle, bonuses, tax return, it will always help you to save faster. And always remember that emergency fund, it's your safety net. Start saving today because a small amount can prevent you from the big financial problem in the future. Another good habit is living beyond your means. One of the biggest reasons why people stay broke because of most of the time they spend more than they earn. If you are always upgrading to the latest phone, buying an expensive clothes or financing car which is beyond your budget, then definitely you're setting up yourself to the financial disaster. So why living beyond your means is so dangerous? First, debt piles up, so overspending will often lead to the credit card debts and loans. Then there is no room for saving. So if all your money goes to the expenses, then there is nothing left to save or invest. Then there is always financial stress increase because if you're worrying constantly about your money, that this is definitely will affect your mental health. So how you can define that you're actually in the category of the people who live beyond your means? First, that you constantly on a daily basis you are relying on your credit card on your daily purchases. Your saving accounts never grows, you have no money left on the end of the month, and you upgrade your lifestyle, or it's car or it's your house, every time you get raised. So here is the simple budget rule how you can reorganize your money. 65% will be under category of the needs. This will be your housing, its rent or mortgage, food, bills, transportation. Another 15% it will be wants. Will include going out, eating, doing shopping, and another 20% it will go to the saving category, which will be your emergency fund, retirement, or wealth building. So how to stop living beyond your means? Firstly, I would recommend to track all your expenses. Use the budgeting app spreadsheet and write down all the expenses. Make sure you differentiate between want and needs. When you are looking to purchase something, you need to ask a very simple question to yourself. Is this something that I really need, or is this something that I like and I want to have it? Another step here is to downsize where is possible. Consider buying a cheaper car, or maybe getting a home with a less lavish lifestyle and cutting unnecessary subscription. Follow 5 days rule. Before making a big purchase, give yourself 5 days and think about that. Is this something that actually you really needed? And another tip here is increasing your income instead of overspending. Here you can start a side hustle or maybe invest in your skills, which will help you to boost your earning potential. Here I would like to mention a quote from The Millionaire Next Door by Thomas Stanley and Danko, who said that wealthy individuals, they prioritize financial security over status symbols. They drive used cars, live in modest homes, and focus on net worth rather than appearance or wealth. Habit number 3 is about relying on credit cards. Many people using credit cards to cover their daily expenses because of their thinking that this is very convenient. But if you're constantly relying on the credit cards, then you're definitely digging yourself into the financial crisis. So why relying on the credit cards is such a huge problem? First, it's about high interest rates, because of most credit cards, they charge from 15 to 30% interest, which is make it hard to pay off the debt. Then we have minimum payments trap, because of paying only the minimum keeps you in debt for years. We have also debt snowballs quickly. A small balance can turn into thousands in interest over the time. Also, financial stress increases because of living paycheck to paycheck, because of the credit card's debt increase constantly anxiety. Here also I would like to describe some of the signs which shows that you are over-relying on credit cards. First, you use your credit card on all the necessities like groceries and rent. You carry balance months after months as you cannot pay it full. You have multiple credit cards maxed out and you're relying on the new credit card to pay off the old one. So how to break free from the card dependencies? First, it's to pay more than a minimum. Even an extra £50 per month can help you to clear debt faster. Use the debt snowball or avalanche method. The snowball is about when you pay the smallest debt first, then you roll the payments into the next one. And the avalanche method is when you pay off the highest interest debt first to save on the interest. Another method is to switch to a debit card or cash. Limit yourself on credit cards only for emergencies or planned purchases. Negotiate a lower interest rate. Call your credit card provider and ask for a lower rate. Many companies will offer better terms to keep you as customer. And the last step is to consolidate debt if necessary. If you have multiple high interest rate cards, consider a balance transfer credit card or a low interest loan to pay them faster. So let's look at the example of the cause of the credit card debt. So if you have a 5,000 balance on the card with a 20% of the interest and only making a minimum payment, it could take over 10 years to pay off, and you will pay more than 5,000 in interest only alone. But if you pay £200 per month instead of the minimum, then you could clear it in 2.5 years, saving 1,000 in their interest. Another habit that I would like to talk here that keeping you poor is about ignoring budgeting. Many people are avoiding budgeting because of this thinking it's too restrictive or complicated. But the truth is, living without budget, it's like driving with no destination. You will always wonder where your money went. So why ignoring budget will always keep you broke? First, you spend money without awareness. Without a budget, money disappears on unnecessary expenses, no saving or investment, because if you're not planning on your expenses, then there is no room left for a saving or investments. Then it leads to debt because of overspending usually will leads you to the credit card debt and overdrafts. Here are also common budgeting mistakes and how you can fix them. First, not tracking small purchases. A few purchases for £5 were very fast and up. So as the solution, you need to checking your bank statements weekly. Another common mistake is to making your budget very strictly. If it's not realistic, then of course you will not follow it. If you remember my previously section, I mentioned that it's very important to dedicate approximately 15% of your income or your wants, where you will include your fun, things you're doing, going out with your friends, or also shopping. And third mistakes, it's not reviewing it monthly. Your income and expenses are changing, so it's very important to review it on a monthly basis. So how budget usually transforms your finances? It helps you to save more without deprived, it stops wasting your money from the things you don't need, and gives you financial freedom and control over your future. Let's move on now to the habit number 5, which is spending to impress others. Trying to impress people with the material things will always keep you broke. And true wealth, it's not about looking rich, it's about having this financial security. So why people, they are trying to impress others? Many people, they fall under status trap, so they are buying expensive clothes, car, just to pretend and to show that they are successful. And particularly nowadays, social media has significantly implied that stress speed up with their lifestyle, which is significantly wrong from the financial side. They make people feel that they have to speed up and keep their lifestyle, which is completely not financially sustainable. But the truth is that wealthy people, they are not focusing on looking rich. They would rather focus on being rich on the financial stability, investment and smart money management. So here is the few real life examples on this habit. First is to buy a luxury expensive car on the credit. Many people stretch their budget to lease or finance an expensive car. As soon as you take your car from the showroom, it loses 10% immediately in the first year and it decreasing its value over the years. Another example is the expensive house beyond your means. Many people overextend themselves with the large mortgages just to impress their friends or other people. But the truth about financial freedom is about buying a home that you can afford comfortably. And here is the quote from the millionaire of the next door who said that most millionaires don't live in the mansions, they live in the average homes, drive used cars and prioritize financial independence over flashy lifestyles. And here is few tips how to break free from those habits. First is stop caring what other people thinking. Your balance in your bank account is much more important than some stranger approval. The second is to invest in the assets, not in liabilities. And the third is to adopt long-term mindset. Would you rather be broke but look rich, or be truly wealthy and have financial peace of mind? So here you have it. We just went through the 5 habits which are keeping people broke. But the good news here is that awareness is the first step to the change. And if you want to take control over your money, that you need to start building your financial freedom. And make sure you watch the part 2. And if you enjoyed this video, you might also like this one. And please don't forget to subscribe if you haven't yet. And thank you very much for watching me, and see you in the next video.